Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Alright, so hi guys, welcome back to the Greedy Trader channel. So for those of you who are new to the channel, this is where we talk about all things market profile. Yes, so again, if you've the first time you've been seeing market profile or hearing about it, or you saw the movie, or I say movie, you saw the TV series Billions and you thought, hang on a second, what's that on dollar bill screen? Then you're at the right place, right? Because we all know here that 95% of institutions use market profile, right? And that's because of the immense power it gives you in terms of being able to visualize and interpret data in the simplest of ways, right? So it makes your trading level up, right? And that's kind of what we do here, is we bring you into everything market profile. So for those of you who have been watching the channel for a while, thank you very much for supporting it. I mean, we don't get an easy time, right? YouTube hates channels like this, right? Where we're not like the squeaking heads, you know, flashing dollars everywhere, massive amounts of clickbait. They don't like channels like us, right? Where we try and teach people things, right? These channels are useless to like friggin', you know, making money as a, you know, tech firm on IPTV. You know, what people want to see is Trevor Noah, right? You know, if you want to see a funny guy, you know, who wants to learn about, you know, just how to make money, right? Especially with so many scams these days, you know, on the internet around trading and investment. I mean, there's so many people talking so much trash that it becomes overwhelming, especially after you've lost a couple of $1,000 trying to do this, or if you're in the UK, a couple of £1,000 or €1,000. You know, I kid you not, I know of people who've lost millions trying to do this, and you know, you wonder why, but on the other hand, it's just the reality of the business, right? So we know it's not easy, you know, trying to sort of get out there and, you know, share that knowledge. But, you know, at the end of the day, you know, I don't need YouTube to live. So, you know, I put out what I can, and, you know, whoever finds it, then I think in that event, you're just blessed that you found the channel, right? Because you're going to learn so much, right? So for those of you guys who've been watching and supporting the channel, kudos, thank you very much for that. But again, you guys would know that this is just another video. Right, so today I want to talk a lot more about setups, right? So some of the trades that I've done, and do not worry, there will be P&Ls on the screen, right? Because for me, you know, I share what I feel I can share, or I want to share, because I think that you can't share everything, right? Because information has value, and we live in the information age, and you know, what people can see, they can use in both good and bad ways, right? So, you know, as an internet kind of person, you want to sort of limit your exposure to some of these inevitable challenges when you become somewhat of a public personality on the internet. So again, I share what I can share, but today we're going to primarily talk about setups. So first and foremost, I'm obviously, for those of you who know me, this channel's been running for 2014. So even some of my very old content, which I have pretty much slimmed down on the channel, to be honest, just to give it a bit more direction, you know, this side of, you know, my life cycle. But those of you who know that I've been a massive, you know, trader of cable for like many years. I've been literally focused and obsessed on this with this asset just because I live in the UK. And it's a lot easier for me to get to grips with how things work here and the fundamentals and everything around it. Whilst I can always tell you hands down, fundamentals do not matter as much as the macro, understanding the macro structure, as well as understanding how you can manipulate both the intraday and the intra-week. Right? And you'll see me do that here time and time again. And if you haven't seen some of my other videos, then I will implore you to go back through the channel, at least for the ones there, and you'll see everything I've talked about. 80-90% of it has come to fruition, not because I'm some trading genius. It's just because I've learned to simplify things, look at market structure specifically. I have a series of steps, and what I have promised though is that I'm going to release a full course program on how you will do this. And I've got a lot of stuff already on Udemy. My courses are massive on Udemy, but again, I also run my own area, right, where I produce exclusive content, high level stuff, right, so that traders who are serious about this and you want to go pro, that's where you need to be. That's the schoolofInvesting.co, right? And I'll put all the details in the description below. Now, all of this said, you know, like I said, I have been a huge trader of cable for a long time, and it's an asset I've come to understand uniquely well, right? As much as I understand everything else, because when you're looking at things when you're looking at things from the lens of market profile, what you tend to be able to see and visualize is pretty much how everything that is bought and sold, what it would look like if it was put on a chart. So it doesn't matter if it's oranges, right? If you can get regular price data for oranges and put it on a profile, you know, you pretty much look the same, like, you know, like cable, right? So it won't look much different in terms of the way price distributes itself. What's really interesting is that I saw a trader who trades horse racing things, right? And he makes pretty good money, and it's really interesting because I'm thinking to myself that here we're seeing like little horse racing betting slips being put into a tradable market with general order flow and everything else. And what's interesting is that, you know, these guys use price ladders in the same way we do in the futures market. They use pretty much most of the tools we use. So if you can take that data and put it into market profile, you get a similar sense of, you know, price distribution, right? Because in the end, we're just buying and selling stuff, right? And that's all that's happening. And we're trying to see where other traders are largely wrong, where the order flow is imbalanced, and that's really what that means, is that largely a lot of traders are wrong. Anyway, so just so we get into this, right, I can talk for England, right? So don't worry about that. So just so we get ahead and we actually get some of what we were supposed to talk about. So going back to some of these setups, right? And we're gonna look at this very objectively, right? So I'm going to take you back to the 20th, right? Which is where, you know, that's more or less this week, and I have the P&L data to show you, right? So what I always say to traders is the most important aspect of your trading day is when the most traders are going to be active, right? Well, at least the first part of the session. When we think about the Asian Open, well, there are going to be some traders, but most people live in Europe, and the vast majority live in the United States, and that we can look at that via demographic, right? 65 million people in England alone. In the US, there are 300 million people. So if we think of it from a demographic standpoint, how many people are going to be trading relative to, say, Asia? Now, of course, we do know that there are a lot more people in China and other parts of Asia, but sadly, they, you know, as a ratio of the population that has access to capital, the vast majority live in Western countries. So you're going to see a big spike up in trading activity when all the major exchanges, and obviously the US dollar is I believe it's 4.8 trillion of the global currency supply. So again, it's going to be more active in a US session and in a European session where the US has a lot of its euro-dollar reserves, right? So if we think about it from a banking standpoint, then we know that 7 a.m., which if we just look at here, that's it's a plus 2 hour broker forward looking time. So 0900 is actually 0700 for me here in the UK. So that's when the London traders are going to kick off, right? And if we look at our profile, we can see in Asia, we see a build up of bids. We start to bid lower, and then we have this dramatic close to the upside, and then an accumulation of bids down here. So we've offered lower, accumulation of bids, and then we somewhat come back and close within value of the prior profile, right? So it gives the sense that if anything, the traders have a short side bias, right? So the premise of my initial trades was, well, if we can take out the lows, right, and we're not always going to be right, we take out the lows, then we should get a little bit more extension. Now, of course, like I always say to guys, is that I take my money off the table really quickly, right? I just want to see a good move, a strong move, and I already have my target levels, and I will show you guys how this works. And that's one of the reasons I want to put together a more structural program that will show you exactly how I take profit consistently all the time, so there's no misconception of how that's supposed to work. So initially I wanted to be on the short side, so I was short, and then we had this big reversal. Now here comes the trick, right? And that's knowing when you want to get long, right? So again, as you can see, we broke up to the highs, right? And at that point we want to get long, and we are literally looking for us to get into reasonable value to cover those profits, right? And I'll show you the P&L associated with this trade. So I was short, then long, because I can quickly see that what was showing me that there were sellers offering to go down were actually buyers absorbing those sellers. If you have other tools, which I do have a course on, depth of market and reading the dome, then you might have been able to pick up on that. But it's, with my experience, you often don't, right? You, most of the time you're going to get caught out anyway, so you just have to accept that taking a loss is part of this game. How you manage that whole situation afterwards is where that's where your prowess is, and that's your cool and calm. The amount of times that I've seen traders get into a position it goes against them, and they get emotionally sucked into the idea that, shit, I am wrong once again. It's phenomenal, considering that you could literally decide to take a chunk of capital that you might have maybe gone and bought a new conservatory or something like that, and decide that actually, rather than do that, I'm just going to throw this at the broker. Either they're going to make the money or I'm going to make the money. You can make such a decision. So there should really be no emotion around your trading, because really it's a portion of capital that you've already mentally agreed to lose, so you can handle it in any way you want to handle it. We would always say good risk management, and that's what I'm showing you here. But you can do whatever you like, right? And that's what separates you. It's the psychological side of it from everyone else. So again, for me, I knew I needed to be long. So the moment we broke back and we took out the highs, I was long, and then I was covering my profits and offsetting what was my original loss. I tend to not want to take more than 2 trades in a day, because that's where over trading comes in. So as long as I can finish flat for the day, I'm happy, because I know that based on the way I trade and the way I strategize, I will either make money or I will finish flat, and that's the objective. And there's going to be maybe those 1% of days, statistically, based on the way I trade, I've calculated that between 2 to 3% of the days that I trade over a given year would result in a max loss, right? That's the maximum amount of loss I'm willing to take in any given day, which is a set figure and parameter, and I'm not deviating from it, right? This presents other challenges when you're that rigorous with your risk management. So for example, scaling up is going to be harder, which is one of my own personal challenges. Also scaling beyond a specific size when I trade, it's really difficult, because I have such strict risk management that scaling up would mean, in a way, it's going to shift my psychology a lot. So anyway, so that was that trade on the 20th. Eventually we did sell off, and we came back, and then we traded much lower. But I'm not really interested in any of this. I'm really interested in what I was able to take out of the market. And it's, you know, sometimes a lot of traders have a lot of regret. You know, the profile shows you all the detail. I mean, in the end, you know, yes, I could have been back in this market out of greed. You know, we broke lower, we took out the lows of the opening range in London, we closed, we retested some of the offers. You can see the offers sitting there, closed lower. Clearly we're offering lower on the breaker J period. You could have been short again. You know, there's a lot of ways that you could have played this, right? and still made a lot more money. But that's, you know, that's the kind of risk we don't want to be taking, because it's against what our rules are. Right, so again, if we take this day for example, so here's typically what you will tend to see from a retail trading standpoint. So again, we got the highs, right? So everyone have been looking at these highs, so there'll be a lot of stops here. Liquidity concepts, guys, remember that, liquidity concepts, go back and review the videos. So again, we pushed higher, right, and that triggered stops and we went up, right? So now this again is the opening London session, so we've broken up and then we took in immediately responsive selling. Now we can see that, right, the profile is clearly showing us the print on the close, so we know there's a responsive seller there. We know because the market hasn't competed at these prices anymore. And then we start to break. As we break lower, we want to see that everyone who is long in this range, doesn't matter where they're long, we want to see that they're completely wiped out of the game. Now, and I don't mean this in a bad way, it's just the nature of the business. We want to be able to see, in other words, how this works. So here we can see that, right? And by the way, for the last trade P&L on the screen, but here we can see that too. As we break lower, we want to be able to get on the short side, right? And if we can do that, again, equally, we're not looking for a huge win. We will like to cover the lows, for example, and that's good enough. And then we don't care what happens here after that. Right, so we can see the similar scenario today as well, quite similar to what we saw the other day. Market offered, showed us potential for the downside, and then we broke back up. Again, you'd want to be long immediately, and then we should have primarily covered at this point, because then again, we don't care what happens here afterwards, right? So you can see the market moves from value to value, right? And value highs become critical and value lows become critical. So usually executing against those out of a major center open is always going to be something that is naturally going to be challenging for your trade. But if you're systematic, you go with it, but you have a plan to, in other words, offset and end flat for the day if you need to. Now, sometimes your execution is going to be a bit wonky. So for me today, for example, I wanted to get short. I was a little bit late. The market ran away a little bit and then pulled back. So I was able to get short on a pullback. So that narrowed my risk on the trade. So when the market came back against me, I was able to have a green day just because my execution was off, right? So sometimes the bad things that happen to us result in good outcomes, but I'm also aware of that. There's a point of me that's aware that actually if I have a later execution and I manage to get a fill within the area I want to trade from, then it's going to narrow my risk by default. And if I'm always looking to finish flat for the day, then any reversals that I'm now going to take advantage of, I'm going to make more from that day. So that's the general idea. So anyway, guys, I hope you've liked the video, and again, you know, support the channel, like and subscribe. But till my next video, guys, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?